Hello, homeowners. This is Shawn Marie Freeman, your dedicated realtor with Realty One Group Restore. And I go by the mantra of life happens in real estate. So, since you are thinking about buying a home, I wanted to introduce you to a quick buyer presentation. This will take you through the process and just kind of show you some things that you need to be aware of when purchasing a home. So, let's get started. A guide to buying your home. And there's my information, my name, Shawn Marie Freeman, Realty One Group Restore, uh, and my email and phone number. So, the 2024 real estate market forecast. You'll see here, this is a national outlook. If you would like more specific to what area you're living in the Philadelphia and surrounding areas, you can just shoot me an email or visit my app or website, and I can give you that information. But for the most part, rates at this time are, and we just ended the first quarter. The feds are talking about going to drop them in June. So we're 2 days into the second quarter, and rates are still around that 6.9%. By June, which is in another 2 months, they do plan to drop them to 6.5%. Now there is saying in our industry is date the rate but marry the house. So rates will, fluctuate, as you are thinking about going through the home buying process. But if you get a rate and get locked into that rate, if you get the house that you want to have, eventually you can refinance that house and get a rate if rates drop. I am not a lender, but I do have within this slide some recommended lenders that can talk to you about rates and different programs they have where you can buy down a rate. So I will share that information once we get to it. So let's move on here. Let's talk about financing your home. Okay. So when you're talking about financing your home, you do have to speak with a lender. And there is certain information that the lender requires when you're thinking about financing a home. And here is Home Financing 101. When I say that the lender tends to require certain information, you need to be prepared to provide bank statements, W-2s, pay stubs, monthly debt amounts, and your tax returns. And you want to ask some pertinent questions to your lender. What is the best loan for me? There's several different types of loan. We have FHA, which is a government-backed loan. We have VA, which is for veterans, also a government-backed loan. You have a conventional loan, which is traditional conventional loan is 20% down. But they do have some affordable conventional loans with between 3 and 5% down. And then you also have a loan called USDA, which is more for like rural areas, suburban areas, which gives 100% financing. So there are several options that you can choose from, and it'll be based upon your credit score, and this other income information that you provide and your debt to income ratio. So again, I do have several lenders. I can teach you this process as we go through the home buying process to figure out what loan is best for you. But the lender is specialized in that area, so he or she will be able to share that information with you as well. So when you're going through the mortgage process, the approval process, the top 10 commandments we want you to remember to avoid is don't change jobs, don't co-sign for anybody, don't buy any new vehicles, car, truck, or van, don't change banks. Don't use your credit cards. If you have them, don't use them in excess. If you buy something small, pay it off immediately. Don't like omit any debts that you have, because when the lender pulls your information, they do a deeper dive. So if you eliminate it or forget about it, it most likely will come up on your credit pull. Don't spend your closing money, the money that you put to the side to bring to the table so that you can purchase your home. Your closing money is the money that you have to bring to the settlement table in order to, it includes your down payment and some other fees that, are part of the process to close the home. So you don't want to spend that money. If you have it in a separate account, do not touch it. Don't make large deposit without verification. Anytime you have money in the bank, or even cash at home, you don't want to make any large deposits to your bank account, because that money has to be what we call seasoned. So if you're like your grandmama and you have $25,000 under your mattress, you can't say, okay, I'm ready to buy my house, I'm gonna just throw all that money in the bank, because the money does have to be in the bank. The bank is in your business for 45 to 60 days, the amount of time that it usually takes to close on a home. So if they see that you have 10,000 in the bank, but then you just throw in an extra 25,000, they're going to wonder where that money is from. So that money has to be seasoned, and we don't want you to put any large deposits, and your lender can direct you as to how to get that 25,000 then into the bank incrementally if you have to deposit. Don't buy any furniture. I know it looks beautiful. Once you choose your house, you're like, okay, I know what furniture I want. I'm going to go buy it right away, or put it on layaway, or create another credit card for it. Don't do that. Just wait till you get your keys in your hand, and you can do all of that freely. And then don't apply for any more credit cards. So don't originate any credit inquiries while you're going through the mortgage approval process. When you do that, it makes your credit score drop. And if it makes your credit score drop, it could potentially stop you from being approved for the mortgage. Okay? So those are the 10 commandments of buying a home, and the 10 don'ts of the mortgage approval. Okay, so let's look at some numbers here. So say you're approved for $200,000 to purchase a home. Now, I'm going to use in this example the FHA mortgage. FHA mortgage is the most, or FHA loan type. The FHA mortgage is the most commonly used, because most Americans don't have a lot of down payment money. And it's a low percentage down. So it's 3.5% down. So that's what I'll be using in this example. So if you go for a house and we put in an offer at $200,000, your down payment with an FHA mortgage is 3.5%, which is about $7,000. Now, 6.5% of this $200,000 is your closing costs. Again, it's title, it's lender fees, it's taxes, insurance, escrows. This is all a part of your closing costs. So that's $7,000, and that $13,000 comes to $20,000. So you need to have at least $20,000. But let's take in consideration some other things. So don't get worried if you feel like, oh my God, $20,000 is a lot of money. Okay. So you usually put down an initial deposit. It's also called an earnest deposit or a good faith deposit. That's usually 1 to 3% of this offer price. So in this instance, we're going to say that you're going to put down $5,000. Okay. So remember, our closing cost was $20,000. We put $5,000 down as an initial deposit to let the seller know, hey, I'm serious about purchasing this home. Please take it off the market and let's get under contract together. So that reduces your closing costs to $15,000. That's the total you would need at the settlement table, $15,000. So you see that $20,000 is coming down. I just want to explain to you, oftentimes, again, because most Americans don't have a lot of money to put down, and they usually have to get some type of down payment assistance or some type of assistance from somewhere. Another option you can use is seller assist. The seller will sometimes help the buyer purchase their home. Now, in the essence of the FHA mortgage, you can negotiate up to 6% seller assist. In this instance, I only use 3%, but you can ask for up to 6%. The seller may say, no, I'm not going to give you 6%. I'll give you 3, or I'll give you 1, or they might say, they might say, I'll give you a flat amount. But if they say that, whatever they give you, that number again comes off of this closing cost number. So this first $5,000, we gave a check to the seller's agent for $5,000. That comes off of your closing costs. You're down to 15. If we negotiate some seller assist and the seller gives you $6,000, then your closing costs will be $9,000. So you see how that 20,000, you might have been like, oh my God, 20,000, but we've gotten that 20,000 down to $9,000 between our initial deposit, which will come off that closing costs. And that is an out-of-pocket cost. You do have to write a check, but it's out of that money that you have saved for closing. And then you went down to $15,000, and then we possibly negotiated seller assist for 3% of $6,000. So now you need $9,000, and that may feel a little bit more comfortable for you, but for some others, it still may be a lot of money. So there are grant programs, and I'll do another video about grant programs that are available that can assist you to even bring this number down lower. So that's how the numbers usually work when you're looking to purchase a home. Okay, let's move on. So here are some of my recommended lenders. I've worked with each of these people, have a relationship with these people, and I recommend them. But if you bring me a lender that you want to work with, I will reach out to that lender and contact them and let them know that I am working with you and we have a mutual client, and let's get them to the closing table. So that is my goal. I will work with anybody, and I will be accountable to them and them accountable to me to help you as a buyer get your home. Okay. So once you go through all of that information, bringing your bank statements, W-2s, your pay stubs, you get what we call a pre-approval. And I liken it to the golden ticket that we received with the Willy Wonka. If you remember the movie Willy Wonka, everybody was looking for the golden ticket. So your pre-approval is like your golden tickets. Most realtors will not take you out without a pre-approval. If you come to them without a pre-approval, they'll send you to a lender that they know or that they work closely with, and request that you go through the pre-approval process, because it doesn't make sense for us as realtors to take you out without a pre-approval, because you might want to go look at a $500,000 house, but maybe you're only approved for $400,000. So we need to know what number you're pre-approved for, and then we can pull the houses that are available at that number so that we can go view them and go through the home buying process. So once you get your pre-approval, it is very much like your golden ticket.